Good morning, everybody. We have a mixed to lower trade in the grain markets here early on Monday morning. It is 6:30 a.m. Central Time. December corn futures down 2.5 cents at 5.54. November soybeans down 2.25 at 13.34.5. September Chicago wheat down 4.75 at 7.14 1/4. September Kansas City wheat down 3.5 cents at 7.02 1/4. September spring wheat up 1.5 at 9.17 3/4. If you guys are listening on the podcast, as always, really appreciate it. Leave me a review or a rating if you have not already. That would help the podcast apps to kind of spread this stuff out. Could certainly help me out on the Apple Podcast app in particular. If you're watching on YouTube, make sure you subscribe to the channel. We're about halfway to my goal of 5,000 subscribers. So if you watch these videos consistently, but you're not subscribed, make sure you hit that subscribe button. Make sure you like these videos, guys. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. For $49 a month, I offer a subscription service. It includes my morning email, which goes out every business day at 6:30 a.m. Central Time. There's a text message service that goes along with this. There are subscriber-only videos where I really get into grain marketing, really get into these markets in more detail, and a lot more detail than I do here on YouTube, of course. So check this out, guys. It's a monthly subscription. It can be canceled at any time. No other fee, no other obligation, no trading account required. You can be a cash-only grain marketer and follow along with this stuff, and it'll work out just fine for you. So certainly give that a shot here this week. To get into the headlines here, we do have a USDA report this week, and that will be your big data point here. This is the monthly crop production and Usda report. It will be out on Thursday morning at 11 a.m. Central Time. According to a Reuters poll, analysts expect the U.S. corn yield to come in at 177.6 on average. That would be down from 179.5 last month. So the trade in general looking for a slightly lower corn yield last month. Now, not all the estimates are suggesting that. The range of estimates is 175.7 up to 180. So there are some traders and analysts who believe that we could see an increase in the corn yield on Thursday. And USDA could very well leave the number unchanged if they don't have enough evidence to change it. And these are going to be the most well-followed numbers or the big kind of headline items on these reports. That doesn't mean that they have to be the biggest market movers necessarily, but these corn and soybean yield numbers probably the most important numbers, at least going into it, I think, in the eyes of a lot of people. Analysts expect the U.S. soybean yield at 50.4 bushels per acre. That would be down from 50.8 last month. As with corn, there are some traders who believe that the number may go up. Range of estimates 49.3 up to 51.3. In this report, the USDA could change anything, any of the domestic supply and demand type items. I think the trade will be watching the Brazilian corn estimate very, very closely. Any other change to the U.S. or global supply demand situation. We're looking for potentially another change to the spring wheat production estimate. So a lot of things could happen on Thursday. That's a big report. Rains fell in some areas of the Corn Belt over the weekend. I'm not going to say that it was fantastic, but there were some areas that did pretty good. There was an area of eastern Nebraska, around that Lincoln area that did pretty good, into that western part of Iowa, but it was kind of streaky. There were these bands of areas that caught 2 inches of rain, but a lot of surrounding areas, caught maybe an inch or maybe a half or maybe nothing. The northeast corner of South Dakota caught quite a bit of rain. There were areas of southern Minnesota that did really well, areas of northeast Iowa that did really well. A lot of Wisconsin was very, very wet. I think there was some hail and some wind damage associated with some of that. That probably goes for some of these other areas as well. There were some areas of Illinois that did okay. So there was pretty active systems here over the weekend. You look at the next 7 days, kind of same story, different week here. Central and eastern areas of the Corn Belt expecting some rain, and then pretty much dry in the plains, North Dakota, South Dakota, Nebraska, Kansas, Oklahoma, Texas. Really not much at all expected in terms of precipitation. You're going to be a little bit wetter here in places like Illinois, Indiana, Ohio, and other areas further east. The 6 to 10 is pretty much warm and dry. Below normal precipitation, above normal temperatures. That goes out into the 8 to 14-day period as well. What I know about the month of August, and I've been telling my subscribers this here for several weeks now, In my view, in my experience, the relationship between weather and markets begins to dissipate when August rolls around. In June and July, you have this very tight relationship between the weather and the markets. If the weather goes one way, the market is going to follow along on Sunday and Monday in particular when you get into these Sunday night sessions, Monday morning sessions. If we've got a hotter, warmer forecast, the market's going to be up. If we've got a wet forecast, the markets are going to be down. I just have not in my career seen that relationship maintain strength into the month of August. It seems like that relationship dissolves for whatever reason. China is back in the market for U.S. soybeans. USDA confirmed a sale of 131,000 metric tons of U.S. soybeans for new crop delivery on Friday. That was the first official flash sale of U.S. beans to China since June 24th. China's purchases of U.S. new crop soybeans are down almost 50% versus the same period last year. So people are hoping that this is the beginning or the start of a better export program in regard to China. Now, China has some issues here. They've got struggling crush margins, a struggling hog sector. Their imports during the month of June, actual physical imports, were down 14% versus the same month last year. So it appears like maybe they've got some issues in China. Some people think USDA may have to reduce their estimate for Chinese imports. Brazil had a big crop, so there's a lot of issues here. Russian wheat prices rose again last week. ICAR, which is a well-followed group, said that export prices were up 5% on the week. Another group, Sovecon, reported a similar rise. Sovecon said this: Russian wheat prices rallied substantially in recent weeks. The rally is expected to slow down thanks to competition with the European Union and Ukraine. Russia had dry weather throughout the season. We've seen production estimates cut there, and movement in that Russian market will often correlate with movements in the global wheat markets. Russia's your biggest exporter. They're kind of the global benchmark, essentially. The U.S. employment situation is improving. The government released its monthly jobs report on Friday. The U.S. unemployment rate dropped to 5.4% in July, down from 5.9% in June. This was the lowest monthly unemployment number in the post-COVID era. I'll show you the unemployment chart here. It's fairly impressive. The non-farm payrolls were much better than expected as well. 945,000 jobs added, I think, or 943. We were looking for 845. But this is pretty crazy. I mean, COVID unemployment, that was April of 2020, was that COVID peak in unemployment. 14.8% is where the unemployment rate topped out in April of last year. It only got up to 10% in 2009 during that financial crisis type peak. So we really killed the job market with this COVID deal, but we're getting back to normal levels. Now, prior to COVID, like 2018, 2019, unemployment had been running 3.5 to 4%, basically. So we're not quite back to that yet, but we are making some big improvements there, certainly. Cash cattle last week was 121 to 122 in the south, 125 mostly in the north, which was a little bit better than the week prior. So a slight improvement there. We'll see if we can build on that here this week. The outside markets, U.S. dollar is a little bit lower. The S&P is down about 6 points. The Dow is down 100 points. Remember, both of those indexes, the S&P and the Dow, posted fresh all-time highs on Friday after that unemployment report. Bonds are about flat. Gold's down $12. Silver's down as well. Crude oil is down sharply, down $2.55 in the September WTI at 65.74. Everybody have a great day today. I will talk to you same time tomorrow.